Welcome to Technical Market Insights, where we're going to look at the world of stock charts, basically investor psychology 101. And that's basically what you're doing when you're reading stock charts. It's telling you the psychology of the investors. Are they buying? Are they selling? What's the short-term moving averages? Things like that just tell you really what's going on in the market before any fundamentals usually do. Uh, if you don't believe me, hang out long enough, you'll get to see what I'm talking about. So as far as the overall market goes, we're also going to do live scans every day to make sure you guys see what's out there, see what I'm looking for, see how I like putting my money to work. So if we look at the overall market, it looks like we had a pretty substantial, not really substantial, half percentage point gains until you get into SMH and XLU. We'll go over those in a minute. One thing I do want to touch on is oil, because I feel like I touched on that last week a little bit when it was oversold here and then never came back to it. I did put a short video out when it got hammered here saying what I would do would be to buy more. And little did you know, if you would have averaged down there, you'd probably be up right now. So just take a look at this. It's oversold here. That was on Tuesday of last week. I believe that is the last time I spoke about it in a stock market update. And then on Wednesday when it dropped, I came out with a short video about it dropping 5%, and basically giving you your options. What do you do in a situation like that, right? Do you just hold it and hope to potentially make profits? Do you sell and cut your losses? Or no, you average, get your average lower. And that's basically what that short video was about. And one thing I do want to mention, when something gaps down, I leave it alone for a couple of days. So if that would have gapped down, let's say I would have bought here, which I probably wouldn't have. A, I don't like trading commodities, and B, it ain't close to the bottom Bollinger Band enough. It crossed under the 20. I would like to see it hit the bottom Bollinger Band, and as you can see, it actually did. But after it gapped down, I usually stay away from it unless I'm in that position already. So if I'm in this position already and it gapped down, I'm going to wait a day, maybe two, before I average in. So I would have probably been averaging in right around here. So if I would have went 20% or 30% of my portfolio, I would have added another 20 or 30%. So you'd be, 40 to 60% in right now. You probably would have an average right around here, like I said, maybe even here, and you'd be up a few percentage points. Now keep in mind, this is coming out of the oversold position, and I think we got quite a ways to go. I think oil is going to continue to run. Like I said, I hate trading commodities, but especially everything that's going on in the world. Unfortunately, the horrific attack that happened in Israel and stuff going on over there, man, just keep them in your prayers. It was definitely crazy things I'm hearing about what's going on over there and what happened. So oil, one thing I did state last time I talked about it is the monthly is also getting close to topping, but at the same time, it's been a lot higher. So it's one of those monthly charts where it's not like SMH's monthly chart, which we'll go to in a minute, where it is, hit basically the previous high on the monthly chart, which was almost looked like a direct V shape. And just bear with me. I'm going to try to stay on task. See, I'm used to coming home and just, bam, whipping through this stuff for myself. So I'm going to try to slow down and explain it without jumping all over the place like I probably have been. So now I'm going to come through and whip through with you guys. So USO, just looking at the monthly and the weekly, kind of hard to call. I feel like in this environment we're going to see it definitely go higher, but it is going to hit some resistance right around 83.62. And if it breaks through that, your next resistance is going to be about 91 bucks. and maybe crap hits the fan, Iran gets in this war, and I mean, yeah, we could see new record highs for oil if stuff escalates quickly over there. Once again, in a situation like this, gap down, just like a gap up. If something gaps up, I don't ever take profits right away, even though like right here is a little tiny gap up, which I wouldn't have been in that anyway, but there's a gap up there because it's under the 200-day moving average. But usually a gap happens with some momentum, and it usually carries a day or two. So just keep that in mind. And let's jump into Dow Jones real quick. I mean, you can see, so that I'm kind of pausing because I want to stick to stock market updates 5 days a week, and then I'm going to get into some educational videos on the weekend, because this bar right here, if nobody really understands the candlestick, so this closed in the middle. So this wick, that was the low of the day, that was the high of the day. So the lower part of that, if you zoom in, this lower part of that candlestick, not the wicks, the candlestick was the open, and the higher part was the close. So it's kind of almost like a wishy-washy candlestick, like people that don't have a lot of momentum like you see here. And let me see, it's right around that 200-day moving average. You get the 20-day moving average. So there's definitely some resistance here. But once again, I'm not worried about the Dow Jones because A, I'm not going to be trading anything in it, which are all these, I mean, I take that back. If they show up on the high cap 1,000, which they probably will, and they look good. But of course, that stock's going to have to be over the 200-day moving average. As far as the Dow Jones goes overall, I would normally trade UDow if this is trading over the 200-day moving average. I'm buying when it's oversold, selling when it's overbought, capitalizing on those swings in UDow, which should move close to 3 times what the Dow's moving every day. So that's a way to kind of play it safe. Not being in single stocks is using leverage ETFs. Just don't stay in them for too long because there is decay involved. SPY. So all these, if you look back through the previous videos, nothing has really changed, right? These are getting up. We expected them to run from the oversold territory to the overbought territory. That's how swings work. And that's what I've been saying, far back as I can remember, and whoever's following me should know that. But all of them, as far as the weekly charts, they're all looking the same. They're getting these tops. If you draw a line there, which I use TC2000, so I'll maybe do a whole episode just on everything you can do on TC2000, which, geez, that I could take way more in one episode. So SPY, I'm personally expecting, like I said, a green October, which you can see it started off green. And I'm basing that based on the weekly charts being oversold and all of them. I expect to see these weekly charts bounce. Oversold, once again, is down here in the stochastics. And most likely top out at this trend line up top. So that's been my basic expectation. XPY, I mean, that's just garbage. Go back to the daily charts. SMH, the same thing. So that part of the stock market update, pretty simple. We got SMH, which not only is it overbought already, it's getting close to the top Bollinger Band. So I mean, personally, I probably would have, if I would have played this swing, which I easily could have, but I don't like anything I need it to at least be trending sideways, preferably upward. So when it starts setting a trend like this, it's not yelling at me to put my hard working money to work, right? Because there's better things out there. And that's the thing with all these ETFs that I normally trade in sectors, when they start trending like this, that means it becomes a stock picker's game, which you've seen. I've been calling for the last 2 weeks, and I can continue to call. But all these are ones that we called. I mean, this right here, I mean, you're up 6%. Dell, I've been covering, said it'll start to swing. I think that was 10.3 the first time I said something about Dell. So if you would have got it around here, you would have averaged a little lower here. You'd be up about 2%. And the companies that I get in are companies I actually don't mind keeping in my portfolio and holding for long term. Even if I trade a single stock, I'm looking at the PE, I'm looking at dividends, I'm doing a little bit of research. Just because, hey, if something does happen, I do study Warren Buffett, Peter Lynch, all those guys, and I believe that you should own only things that you were willing to hold if the stock market was shut down for 10 years. So if the stock market shut down for 10 years and I'm in a company that's actually making money, paying a dividend, okay, then I'm going to go put the rest of my money to work somewhere else and let that money just, that's a hypothetical situation, but you get the point. So all these that we basically went over last week, in the beginning of this week, I mean, charts are shaping up to go up. All of them were up higher, a lot higher at the beginning of the day. Looked like they had a little sell-off kind of end of the day. But one thing you can always expect, just like we looked at the monthly chart, the weekly chart, the daily chart, you can look at the hourly chart. So I expect hourly swings as much as I do daily, weekly, and monthly swings. All the charts will do the same thing. Now, I don't like going back to 30 minute, 1 minute, 15 minutes, but you can see they all got their swings. So yeah, I mean, these are your hourly charts going to swing. Nothing continues to go up in any time frame. So yeah, I would continue to expect those to move up. Don't hesitate to lock in profits. Remember, if you don't take your profits, somebody else will. And like I said before, I like buying when the general market is oversold. So I would be shopping here. I'd be locking in profit here, shopping here, locking in profit here, even if it's in single stocks, because things will tend to move better for you. If the whole market pulls back 5%, or let's say 2%, and you got a stock that's oversold that is fighting the overall market, trying to move up, it just, it could definitely play out in your favor, but you definitely got to have a little bit more patience and a little bit more willingness to manage that position and actually make it work so you can lock in profits. So the overall market, I'm waiting personally before I go shopping to see this market pull back, oversold position. I've locked in all my profit on my trading portfolio, all cash, and my long-term portfolio, and that's how you overcome FOMO, the fear of missing out. I couldn't tell you how many times I've told people this, but have two accounts, right? Have you a long-term account and a trading account. So both of them should be getting a percentage of your income every month. Unless you're just really bad at trading and your trading account's getting wiped out, don't keep funding it. Learn what you're doing before you keep throwing your money away. But the best way to miss the fear of missing out, or get past the fear of missing out, is if you're buying here and locking in profit here on your trading account, and you have a long-term account, let's say this thing just keeps breaking up, it looks like it's going to set new highs. You can be patient enough in your trading account to wait. I mean, there's a month between that swing right there, 1.3 months, to wait almost 2 months for a pullback in your trading account because your long-term account is still putting in work. It helps defeat that emotion, I find, really a lot. So let's see. So this is our high cap 1,000 bullish chart scan. As you can see, I got it in the range of oversold as far as stochastics go. And we got one stock chart that's coming up. So there's one bullish chart that's oversold. And if you look at that, it's FedEx. Now, personally, I would try to wait for the bottom Bollinger Band. I mean, it's just hitting oversold territory. The rest of the market's overbought, getting there. Yeah, I mean, I'm not rushing to throw money at that. Be patient. And then we go into CCJ, which is something we've already called. I'm going to clear these out and I ain't going to keep watching them. I mean, just manage your positions wisely. And all this is for educational purposes, right? If you trade on it, that's your responsibility. So this is exchange. This is ETFs. So this is our bullish ETFs. That's oversold. We really don't have much going on there. That's something I wouldn't touch. It's a fund. You got uranium miner ETF. Oversold. Not really oversold enough though. Yeah, I mean you go from 22 right to 34. So there's not much out there oversold and bullish. But if you look, there is a little bit of oversold ETFs overall. A lot of this is just going to be crap I wouldn't touch. Cannabis, like I said, that's on my radar for once it makes a couple swings over the 200-day and actually starts holding the 200-day. I mean, I truly believe in the next 10 years. I mean, when I say I'm going to start making a position, I'm talking about my long-term portfolio. I like adding stuff in there that I believe in the next 10 years, might get you 1,000% return, which is very hard to find. But I think cannabis could be one of them. Nuclear energy could be one of them, which is why I've been loading up on BWXT. You take a look at Project Peel and Trizo Fuel. Very enticing for me. Plus the company's sitting at a good PE and pays a dividend. Things like that. Something else, PHO, just a water jumped under the 200-day moving average. Now that overall ETF hasn't been on my list, but CWCO, this is a water company that turns seawater into drinkable water, based out of the Caribbean. Do some research on them, but I've been long them for a minute as well. Let's see, so not much there really. Let's just go, just while we're here shooting, let's just look at some charts just so you guys get the feel for it. I mean, I've done this for over 20 years. I can't remember when I started using TC2000, but it's been a long time, and I've looked at every technical indicator from A to W. There's no Z on every ticker, and I've studied it out over and over and over again. So the more you look at stuff, the more confident you get, the better understanding you get. So once again, we're oversold here. Now, if you would have bought right when it hit oversold, you might have got in right around here. Booz Allen Hamilton Holding Group. I feel like sometimes I know every stock in the high cap 1000, but sometimes they get me. I have no clue what this company is. But let's just say you buy here because it hit oversold, which I wouldn't have, because I would have been turned off by these huge red candles. I mean, that's only 5%. I thought that might have been more than that. Little weird sideways movement. Actually, heck, let's say you bought right here, just for giggles. So you bought when it got oversold here. This is where patience comes in, people. So for almost a month, you would have been sideways a 0.5 percentage point. I wouldn't have added more in right there at all. I may have actually put money to work somewhere else just a little bit, so I still have money to manage this position. Right here is when I would have started. Yeah, you get down 5% in a position, you double up whatever percentage you went in. If you went in 20%, you make it 40. Now you're 40% of your trading accounts in this. And look, you would have probably, without getting a calculator and doing the math, let's say you brought your being down 5% averaged, let's just say 2. And guess what? You got a rebound and you're up 12%, locking the profit, get out of there. But that would have took you a total of almost 2 months. Swing trades can take 2 months, sometimes longer. You got to have the patience and the ability to manage that position. By the ability, I mean the cash flow. Let's just take a look at another one. Where are we down here? Aflac. I didn't do that before it even came up. But yeah, I mean, there's so many, this would have worked out for you many times over. Not big swings, which that's usually what I look for, is why I trade leverage ETFs. I like to see 20, 30% possible swing, which you can see those many times in leverage ETFs, especially ones, you know, like SOXL, which is a semiconductor ETF. Let's just see here. I mean, 10% in 18 days. What did SMH do? Seems to be more decay on this lately. That's 5%, so it's only done double. But there has been many swings where you could have capped, and I go over a bunch in the book. Check one of my books, I think it's the Trader's Edition. I go over Dow Jones over the last year. If you would have capitalized on all those swings, you would have been up 158% for the year. So let's see here. Now that's assuming you got your entire portfolio position in it and stuff like that, which there were plenty of instances. Let's just go since I'm bringing it up. I was probably hoping I'm stopped talking. But yeah, right here. Well, I would have locked that in because it hit the 20 and the 50. 2%. I might as well just pull a view down. It'll be easier to look at. Now see, this is under the 200-day moving average, so I wouldn't have touched it, but it's 18% in a month. I mean, it's kind of really hard to use examples I wouldn't touch. Right there is 15% in 2 days. Or, I'm sorry, it wasn't 2 days. Let's see, you got here, you went to profit there. You get the point. If you stay focused on 2 stocks, which is what I do with SPXL and UDOW, I mean, you can make some pretty big gains. And if it's not there, you're always scanning for opportunities in other sectors and other single charts, single stock charts. SOXL is the one, I mean, just coming up over the 200-day moving average, but 65%. Just to show you the potential gains. And guys, trust me, the market will be, there will always be trades, and the market will be in another time frame where it is trending sideways and up, just ripping up. There's going to be years where you can just, especially as much as I hate to say it, with another administration, I feel like this has been horrible for the market and everybody's pocketbook. But under a good administration, hopefully a Trump coming back, I mean, man, 200-day moving average won't even be a question. Most of everything will be over that, and the only thing you'll have to do is capitalize on this oversold, overbought swings, lock in your profit, be patient enough to wait for the next one, keep your long-term account taking advantage of it, and just keep on it. Right here, let's just look at one more. I mean, if you would have, man, bought that when it was oversold, which is about the time the overall market was oversold. Just keep in mind me saying that. That's what I like to shop the most, is when the overall market's oversold. 8% in 13 days, not huge, but hey, I mean, it is actually huge considering most people just hope to make 8%, 8 to 12% a year. So as much as I say 8% in 13 days isn't huge, it actually really is. I'm used to bigger swings of that. But do myself and yourself a favor, hit subscribe, turn on your notifications, share it. We're going to take a look at the market every day. It might not be much more to update because I've already said what I anticipate happening. I'm not trying to boast on myself, but I have a feeling we're just going to watch that play out. And maybe not. Maybe I'll be wrong. Wouldn't be the first time. Won't be the last. And we'll do that 5 days a week, and I'll get into some educational videos during the weekend. Like I said, hit subscribe, share with your friends, leave a comment, give me any feedback you want. I love constructive criticism. Any way I can make this better. I'm still working on the microphone and the recording platform, trying to figure out what's best for me to be able to do this, get in quickly, just shoot you guys some commentary and analysis every day of the week. Hopefully I'll be able to have a studio here soon set up, but to be honest, I'm cheap. I would much rather put that money to work than, it's kind of weird to say, invest in a studio type environment, but it's an investment, so that money's going to work. So who knows? See how it takes off first. Leave me a comment, subscribe, and guys, you work too hard for your money to lose it. Keep things very simple. Don't overcomplicate them. And lock in your profits and compound your profits. Don't compound losses, compound your profits. Be able to manage your positions. And remember, if you're holding on to stuff that's under the 200-day moving average, just call it quits, man. Move on. It's nothing you want to, it might bounce right back up and go up, but the amount of times getting out of, I'll show you an example, RTX, the amount of times getting out of something that crossed under the 200-day moving average has saved me from huge losses. Oh my goodness, like my portfolio would be trash right now. And this is one example. RTX, I got out right here, I got in before ex-dividend date. As soon as it crossed under the 200-day moving average, I had an alert set up. Bam. Got out. And I posted on Stock Twist. I'm out. Dropped under the 200-day moving average. Still get my dividend, so I'll be all right. Didn't really take much of a loss. And of course, I got hammered on Stock Twist. And then like a week later, since my post, it was up like a percentage point. Somebody's like, "Oh, how do you feel now?" I'm like, okay, let me explain to you what I've done with that money. I took it out of one that is trending crappy, can't hold the 200-day moving average, and I just went ahead and took that money and put in something I've been telling people to buy since January, trending good, something I've been loading up on. I can't remember the date. I want to say it was like right around here. Go back to RTX. My last example, I'll let you guys get on with your day for whoever's watching. But yeah, it was right around 523. Yeah, 523. So I took my very small loss on RTX. I waited patiently. I want to say I entered, I want to say right here on BWXT, a little bit into the oversold territory. And that buy, I'd have to look at my average right now. That buy's up 25%. Let's look at RTX, where if I would have held that when it crashed under the 200-day moving average, yeah, I would have came back up. But that position would be down 22%, as low as 30%. And honestly, it wouldn't surprise me if it goes lower. There's nothing, you got two big gap downs. Like, geez. I don't even know the fundamentals that's going on with the company, but I don't need to. I know it can't hold the 200-day moving average, and that's all I need to know. Like it was an easy sell for me. I won't look back. Now that thing could have, after that, it could have ran up and set new highs, but you know what? I wouldn't have cared, because you can't look back and regret a decision you make if you're sticking to the rules you have set in the market. Just looking at XDO for a minute. I ain't looked at that chart in